Hello, Oracles. Well, yesterday we had a really nice bull trap that faked us all out. Well, maybe not all of us. Some of you on here knew that it was a bull trap. Kind of had a feeling it was going to be, but I was trying to stay optimistic and hope it wasn't. But here we are. Definitely was a bull trap. We are now looking very ugly today. The S&P is down 3.25%. The Nasdaq is down 4%. The S&P has dropped below that 3750 support. The next support we have is 3350. So we'll monitor this, see how much further down we come. And honestly, at this point, we're seeing a lot more capitulation going on in retail investors. They were the last stronghold. So we're starting to see some of them cave, and capitulation is when you finally cave in and start selling off of your stocks. Even for me, I'm not looking to sell anything. I have a small enough portfolio where I'm just going to keep on holding this out in dollar cost average, but I am going to alter my dollar cost average strategy. So some of the stocks that I am in, other than Tesla, I'm going to see what level I want to get them to and then just stop, and I'm going to start putting that money into cash. Because realistically, I've said it before, once the market does start to turn around, we are not going to have a V-shaped recovery. Granted, I don't know what the future holds, but just seeing how we're playing out right now, seeing historically how times have been during like this and how we've come out of it, it has not been a V-shaped recovery. So I'll have plenty of time to dollar cost average on the way back up into these stocks that I like long term. So I will just let them ride and I will keep cash on the side instead. And now I do have a gut feeling that we will be going lower. Now granted, I've had a gut feeling in the past thinking we were not going to go any lower. I've also had my gut tell me that it wants to eat foods that it shouldn't eat. So my gut really isn't the best thing to trust, but I'm starting to see some signs. I mean, Elon has said it himself. Many other people have been saying we are going much further down. Many of you have said it. Chicken Genius has said it. So I'm not one to predict what's going to happen. Just looking at charts and looking at a lot of other people's feelings on this, seems like this is the trend that we are going. Historically, if we're looking back at the dot-com bubble, if this is a similar pattern to the dot-com bubble, we still have a ways to go down. Is this going to mirror that? I don't know. So I'm still going to, again, do my dollar cost average with Tesla. The other stuff I'm going to put in cash. And just wait. I mean, even Jerome Powell had said with the housing market that you just need to wait. That's kind of where we're at right now. We are in a holding pattern and waiting. Now, looking at timing, when are we going to hit the bottom? So looking at this, I think there's just so many factors in play, but I think the major factors that we have in play right now, obviously inflation is a big one. And when it comes to inflation, it's really oil prices right now are dictating what is happening in the world. So yes, it's going to be a huge relief when we can stop relying on oil for things like this. But unfortunately, we're still in this situation and oil is controlling everything. So when we see oil prices start to come down, and we did start to see it a little bit today, when we start to see oil prices come down and it drops below 100, drops below 80, drops below 70, that is when we are really going to see inflation start to inflect down. That's going to be a huge piece. So looking at where we're going forward, I mean, even if we get into a recession and the Fed decides that they need to go more dovish because if they keep on raising interest rates, it's going to make a recession worse. If oil prices are still high, it's not really going to make a difference because oil prices right now are dictating the inflation. So this is kind of where the Fed is handcuffed. We are kind of stuck in this situation, just awaiting oil prices to come down. So this is where we're stuck, and because we are stuck in this situation, it's just a waiting game, and the market's going to be reflecting that. Saw it today, and we're just going to keep on being an ugly market until that changes. When is it going to change? Nobody knows. If the war ended tomorrow in Ukraine, maybe that's the day it changes. Who knows? Man, again, we spoke about it yesterday. Biden's going to be going over and speaking to the Saudis in July, so maybe that's something that will help change things. Maybe we can bring the oil prices down then. I don't know, so I would love to bring more hope and joy to this, but unfortunately we're just stuck in a situation of a holding pattern. I know this is again where we've said it from the beginning of the year, cash and cash flow generation are going to be your best friend right now. So if you're holding cash, I can't be a financial advisor, but I know I'm building up my cash reserves and I'm working at as many opportunities as I can to have cash flow generation coming in. And I'm going to be stockpiling it. I'm going to DCA because I don't know. Because again, if oil prices fall $30 in the next week, the market could turn around right away. So some major things could happen instantly. So that's why dollar cost averaging is the best way to go historically when it comes to your portfolio. And another thing that you can pay attention to when it comes to when we're going to hit the bottom is in the charts. You'll see that it's going to come down and it bounces. We've been on this dead cat bounce for most of the year, which several of you have called, so good job on that one, guys. And as it comes down, once you start seeing smaller bounces, and then just the downward isn't such a straight downward cliff, and we start to kind of level off a little bit, that's when you can tell we're starting to get to the bottom. So clearly, after a 4% drop in the Nasdaq today, we're not near the bottom yet. So we could be coming down. Now, granted, maybe all of a sudden we start to smooth out over the next couple of weeks. Could happen. But again, a lot of it comes down to oil. So another play that I'm still staying in is, I had mentioned it in the past, is QYLD. If you're getting into some high dividend yield stocks, may not be bad to get into because you can get at least some good returns on this. I mean, right now, most people's portfolios are at a negative return for the year. Let me know in the comments below if you guys are actually positive on the year, because that would be absolutely amazing, because I can guarantee that the majority of people's portfolios are in the red, and it's pretty ugly. So I'm not looking to sell, even if this does last a while. Again, my portfolio is small, so I could just keep on adding to it or holding cash on the side to be able to capitalize on that later. But adding into stocks that have high dividend yields could be beneficial to at least kind of get some of these benefits of, some sort of return on your investment. And another option that some people do is trying to play that dead cat bounce. This is a lot about timing the market, something I am not good at, and I don't have the time to watch the charts all day long to do this. But if you try to catch a stock, as it's hitting that bottom and you buy in there, you might be able to catch a little bit of a profit on it and sell out. These are going to be strictly short-term swing trades just to be able to catch a bottom, catch a little bit of a profit, sell out of it, and be done. Again, I'm not a financial advisor, but this is a strategy that some people do try to use in markets like this. And now that is a very risky play. It is more of a gamble in my eyes because, you really have to be skilled in order to make it not be a gamble. But it's risky. Could make some profits, but you could also lose a lot of money doing it. So just be cautious if that is a strategy you want to play with, and make sure you do your own due diligence and research. And I did not advise you to do that. It's just an option. And so the Nasdaq right now is trading at levels that we haven't seen since July of 2020. Now this is after we started a little bit of a run up after the Fed decided to drop interest rates to nearly zero after COVID. So how much further can we fall? Some people say we can go down to 10,000. Currently, we are at 10,646. So some people say 10,000, some people say 8,000. So how much further down we are going to fall has yet to be seen. .com crash, we saw it fall down 80% from its highs. And 8,000 would be over 50% drawdown from the highs that we had in the Nasdaq. How far we're going to fall, again, we don't know. There's so many uncertainties going forward, and the market is going to price in the worst case scenario as to what it thinks it's going to be playing out. And anytime we get more information that says things could get worse, it will get worse in the market. It's just how we're going to go. Until we see some clear sign of recovery, we are not going to recover. And again, the market prices things out for 6 months. So right now we're pricing out the next 6 months, and it's not looking pretty. So if in 6 months, whenever we hit the point where 6 months in the future we foresee a turnaround coming, that's probably when we will see the bottom and start coming out of it. So when do you think it is that we are going to finally see this U-turn? If it's going to be in June of 2023, that means the bottom will probably come in Q3 or Q4 of this year. If you think it's going to be in 2024 that we are going to see the turnaround come, then we might not see a bottom until the middle of 2023. So it's a lot of things to happen between now and then. Obviously, this is why we take things day by day and just do the best that we can. This is also why dollar cost averaging is the best way to go, because nobody knows what the future is going to bring. And again, if you think that it's going to keep on coming down, the cash is going to be king for you, and many of you have been very successful with that along the way. Let me know in the comments below, when do you guys think we are going to hit the bottom for the market, and where do you think that bottom is going to be for the S&P, for the Nasdaq, and for Tesla? Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat, that link is in the description. And if you'd like to support the channel any further, I do have a Patreon, that link is also in the description. Thank you so much, have a great one.